Good afternoon, everybody. A month ago, the stock market was still falling because of the war, and oil prices were surging. But as you know, we were trying to highlight some, I think, really important points about stocks in wartime. One was that stocks bottom early in a war. In fact, the adage was, um, you sell the buildup, buy the bullets. And we were also making clear that if you looked at analogs like World War II, that was a 5-year war. The stock market bottomed 5 years into World War II, even before the US committed any troops. And it was important to think about that because even if we didn't know how long this Iran war was going to be, very likely the market would bottom way before the fundamental news even got any better. Because going back to World War II, it was not even certain the US could actually win against Germany. Um, and here we are. So the market's staged a V-shaped rebound, but as you know, this has been sort of the norm for markets since since COVID. And so I have a few slides I want to share. Okay, first, we are still in the midst of the fog of war. I'm just looking at headlines today, so it doesn't look like the administration knows who they're even negotiating with because some of the parties they were negotiating with have now been replaced. But in our view, it still doesn't matter. I think the market has already bottomed, and it bottoms early into the invasion. And the recoveries that are typically seen are V-shaped. And again, this is something that we've talked about. And if that's the case, just keep in mind that is more the norm because of all the major lows since 1900, the vast majority are V-shaped. And that gets us to our roadmap for this year because we still think we're going to reach in the near term 7,300.